Trump and crypto an odd couple. So, did you know Trump is actually serious about crypto? I mean, we laughed it off when he sold those NFT trading cards, but this time, he's not playing. On January 23, 2025, the Trump administration casually drops an executive order saying, hey, let's legalize and support stablecoins. Why? To protect the almighty US dollar's global throne. In short, it was the birth of the Avengers of crypto, assembled to keep the dollar king. Fast forward to March 7th, the White House throws a crypto summit. Yes, like a literal crypto party. Treasury Secretary Scott Bessent stands up and says, stablecoins are how we defend the dollar's global reserve currency status. That's right, they want to launch the dollar higher using crypto as the launch pad. Stablecoin wasn't even a legal term. Here's the kicker, stablecoin wasn't even a legal term. It was just crypto brothers being casual. Think of it like calling macarons traditional rice cakes at a family event. But now? Congress is writing it into law. Enter the very smart-sounding Genius Act, because calling it the kinda smart act just wouldn't hit the same. Filed in February 2025, passed the Senate Banking Committee in March with bipartisan support, 3 Republicans, 1 Democrat, all smiles and handshakes. It's literally the one team, one coin bill. Then, on June 17th, Senate vote, 68 yes, 30 no. Every single Republican said yes, plus 18 Democrats. You could almost hear the Marvel soundtrack swelling in the background. But like any good movie, the story's not over yet. The bill heads to the House, where another bill, the Stable Act, is waiting. Different name, copy-paste contents. Republican Rep. French Hill from Arkansas is leading the charge, and the floor vote is expected between June 24th and early July. Next step? Merge the two, final Congress approval, Trump signs it. And since he's already announced support? Yeah, unless someone steals his pen, it's a done deal. Stablecoins are moving from nickname to legal birth certificate. This isn't just about tech, it's a full-blown currency royal rumble. Your grandkids might read about it in textbooks. In 2025, the US adopted crypto. The Genius Act's core rule, just $1, period. The law's message is simple, you give $1, you get 1 coin, anytime. No excuses, no delays. That principle? It's called NQA, no questions asked. Sounds like a mobster slogan or something from a spy movie. Honestly, it feels like the new world for crypto. A real-life Shinsei moment for finance nerds. How do these stablecoins make money? Buy bonds, baby. So, how do stablecoin companies actually make money? Some secret source? Nope. It's stupidly simple. You give them $100, they mint 100 coins, they use your $100 to buy US Treasury bonds. And those bonds? Right now, they yield about 4.3% annually. No investors needed. No fancy staff. All you need is a laptop and maybe a decent coffee machine. In other words, the ultimate no money down business model. Seigniorage, from royal privilege to office reality. Here's the fancy word of the day: seigniorage. Back in the day, kings would mint coins and pocket 80% of the value as profit. That was seigniorage. The ruler? Called the seigneur. The profit? Seigniorage. Modern translation? Royal allowance. Except now, private crypto firms are doing it. And guess what? They don't even need metal or paper. Just keyboard strokes. Boom, done. It's like the IT-powered resurrection of the Joseon dynasty. But what about the money supply? Every time a coin is issued, new money enters circulation. So what happens? Inflationary pressure. To get it, we go back to 17th century London. Goldsmiths took gold, issued paper receipts. Those receipts started getting used like money. Eventually, people realized, wait, this works even without the gold. And they just printed more receipts. That's stablecoins today, money without the money. Are stablecoins basically banks? Answer, yes, sir. They function like banks. But instead of giving loans, they buy bonds. Instead of tellers, they use blockchain. Instead of vaults, they just mint coins. That's why some economists say modern banks are just legal counterfeiters. So what does that make stablecoin firms? The SaaS version of counterfeiting. Real-time, on-demand currency minting. But can the government even control this? That's the tricky part. Did they issue the coin before or after buying the bond? No one really knows. As long as the end balance checks out, no one's asking questions. So we get strict-looking rules, sponge-like loopholes. CBDC versus stablecoin, who owns the money? CBDC, government-issued digital money. Stablecoin, privately issued. So the big question becomes, who gets to create money? Now, both public and private entities are minting value. That could lead to an overflow of money. Cue real estate prices, rents, and household stress going up. Yay, seigniorage, the deliciously dangerous temptation. This isn't just a clever business model. Seigniorage is value built entirely on public trust. And when that value becomes a company's profit, that's like a private firm charging people water bills and forcing them to rent water purifiers. Bottom line, public trust, shareholder dividends. That $1 in your wallet? It might be someone else's loyalty point. That explains the push notifications. Global power play, stablecoins are just the tool. America's betting on stablecoins to protect its financial empire. Because printing dollars isn't enough, you need other countries to use them too. But the US, these days it's pulling back from allies. Tightening trade, military power? Questionable. So what's left? Fly the dollar, with crypto wings. Trump declares, the dollar's wings are crypto. Europe's got euro coins. China's cooking up its own digital yuan. Russia's working on ruble coin. Everyone's gearing up for the currency hunger games. The real weapon? Not code but trust. Who's safer, more transparent, more stable? Stablecoins are a digital mirror of national character. America may still be smiling, but other countries are quietly polishing their reflections. Whose money is it, anyway? Stablecoins aren't just about tech, they're about power. Because printing money, massive authority. What we're really watching isn't just crypto, it's sovereignty in action. This little coin could shake the entire global economy. Stablecoins? Stable in name only. Inside? A full-blown revolution is waiting.